Hey everyone, welcome back to the Deep Dive. Today, we're not just sifting through numbers. We're really uncovering a fascinating strategic pivot from MaxLinear's second quarter 2025 earnings call. What emerges is, well, a compelling narrative of how this company is sort of quietly positioning itself. In the booming AI and data infrastructure landscape, often away from the immediate headlines. We're going to unpack their recent recovery, their strategic bets, and what it all signals, really, for their trajectory in this rapidly evolving market.
Exactly. We've meticulously analyzed the conversation with CEO Dr. Kishar Sudre and CFO Steve Litchfield. Our mission for you today is, well, to cut through the noise and deliver the essential takeaways, highlighting not just what they reported, but why these strategic moves are so significant.
Okay, let's kick things off then with the top-line numbers for Q2 2025. MaxLinear reported approximately $108.8 million in revenue. That's a really solid 13% sequential increase quarter over quarter, and an impressive 18% jump year over year from Q2 2024. This figure actually exceeded the midpoint of their own guidance, which is always a good sign.
It truly is. And this strong revenue performance was coupled with a significant improvement in profitability. They made a critical return to non-GAAP profitability, achieving a non-GAAP gross margin of 59.1% and a non-GAAP income from operations at 7% of net revenue.
Okay.
Crucially, they also generated positive free cash flow, about $10.5 million from operating activities, ending the quarter with a healthy $110 million in cash.
These numbers definitely suggest a positive inflection point for MaxLinear. But, on a volatile market like semiconductors, what exactly gives you confidence this is a sustained recovery, rather than just, say, a cyclical rebound?
Yeah, that's a great question. And it brings us right to the core of their strategy. What's truly fascinating here is the consistent theme of strategic investments and what they clearly define as like high-growth foundational areas. It's not just about broad market recovery, it's about these targeted plays.
All right, let's unpack this then. Let's get into those strategic drivers behind these results and what management sees on the horizon. First up, data center optical interconnects. They're projecting a significant 60% from this segment, primarily driven by their 800 gigabit 5 nanometer Keystone PM4 DSP family. For those wondering, a PM4 DSP, or digital signal processor, is essentially the highly specialized chip that processes and encodes data to enable incredibly high-speed communication within data centers. And 5 nanometer refers to an incredibly advanced, power-efficient chip manufacturing process, making these chips smaller, less power-hungry.
Yeah, and this point is absolutely critical because, while many players are scrambling for a piece of the high-profile NVIDIA AI GPU pie, MaxLinear is strategically sort of sidestepping those direct ramp. Instead, they're focusing on what they call the front side of the network, partnering with all major module makers. This isn't just a broader market strategy, it signals like a deliberate move to become a foundational, diversified supplier across the entire data center ecosystem. Rather than being beholden to any single customer or specific AI cluster type, it positions them as a vital, third option in a market that's hungry for alternatives and resilient supply chains.
That's a bold move. Almost counterintuitive given all the AI hype, isn't it? Is there a risk in avoiding those high-profile ramps? Or is this really a calculated decision to secure a more stable, diversified revenue stream?
It really appears to be a calculated decision. Yeah. Aiming for broader market penetration and reduced customer concentration risk. And they're building on that foundation, too. Looking ahead, their new Rushmore 200 gigabit per lane, 1.6 terabit PM4 DSP is generating robust interest. Management sees Rushmore as a tipping point, potentially.
A tipping point.
Yeah, to move into the top two players in the optical DSP market, emphasizing their even more advanced node, a 3 nanometer process, and superior low power performance. However, it's important to note, 800 gigabit will remain dominant for the next few years. Rushmore volumes likely ramping probably late 2026 into 2027.
So they're looking ahead to the next generation of speed, but they're not rushing their market entry. And interestingly, this push for 1.6 terabit also includes engagement with copper guys for active electrical cables, or AECs. For those who aren't steeped in data center wiring, AECs are essentially active copper cables with embedded signal processing that can, extend the reach and performance of traditional copper wires.
Precisely. And AECs could become incredibly significant as data rates increase beyond 1.6 terabit, primarily due to their power efficiency. If we connect this to the bigger picture, it just demonstrates their comprehensive approach to connectivity solutions, not just optical.
Okay, so we've talked about their strength in data centers. But MaxLinear isn't just connecting the wired world. Let's shift our focus to wireless infrastructure. The market there is showing clear signs of recovery. With increased carrier capital expenditure for the second half of 2025 and into 2026. MaxLinear's Sierra 5G wireless access single-chip radio SoC, that's a system-on-chip, meaning they've packed an entire radio system onto a single chip. And their millimeter wave and microwave backhaul transceivers are seeing new design wins, with 2 major North American telecom providers, no less.
Yeah, this is a strong indicator of sustained growth, particularly as demands for cloud and edge AI functionalities continue to increase through 2026 and beyond. As more of our digital lives move to the cloud and AI becomes pervasive, the need for robust wireless infrastructure only intensifies. Then there's another intriguing area. The Panther family of hardware storage accelerators. These are apparently gaining strong design success with Tier 1 network appliance and cloud service providers. They'll be showcasing the next-gen Panther 5, which offers over 4 times power savings compared to traditional software-based compression.
Right. And this product line is projected to potentially triple in revenue next year. Management sees it as maybe a $75 million to $100 million per year opportunity in 2 to 3 years. Possibly even doubling that.
Wow.
Its application in AI infrastructure is particularly compelling, and this is crucial. Think about the sheer scale of data that AI models need to churn through. The Panther accelerators are essentially specialized data superchargers, directly addressing those bottlenecks like power efficiency, memory throughput, and reducing latency. This isn't just about faster computing, it's about smarter, more sustainable computing for the AI age. Okay, interesting. And in broadband and connectivity, they're witnessing steady growth, fueled by major North American carriers ramping up fiber PON access buildouts. A new single-chip integrated fiber PON and 10 gigabit processor gateway SoC with Wi-Fi 7 is set to ramp with a second major Tier 1 North American carrier later this year. Fiber PON, passive optical network. That's the fiber optic tech bringing high-speed internet to homes and businesses.
Exactly. And this indicates real market share gains, not just simple inventory replenishment. It reflects increased capital deployment by service providers to upgrade their, last mile connectivity. It shows customers are actively choosing MaxLinear solutions for these critical infrastructure projects.
Right, makes sense. Finally, let's touch on the Ethernet market. They're actively expanding their 2 and 2.5 gigabit Ethernet switch and PHY portfolio. A PHY here refers to the physical layer transceiver, essentially the component handling the electrical signals for Ethernet. This upgrade from 1 gigabit Ethernet to 2.5 gigabit, notably using existing cabling, that's key, represents a significant $100 million per year revenue opportunity for MaxLinear by 2028. It's an easy kind of cost-effective upgrade for customers.
Definitely a smart play there.
So what does this all mean for you, the investor? Beyond the product specifics, there were some interesting insights into overall business dynamics that paint a broader picture.
Yeah, their Q3 guidance, for instance, projecting revenue between $115 million and $135 million. That certainly suggests continued strength across all end markets. Now, Q3 operating expenses are guided slightly higher than some might have expected. But management clarified this is due to expenses pushed from Q2, with expectations to reduce in Q4. Crucially, this also includes significant strategic investments, future AI-related products, and critical cost-down initiatives designed to preserve gross margins. So it shows a forward-looking approach.
Got it. They also addressed geographic dynamics, noting strength in the U.S. and Europe, but a somewhat mixed bag in China, while some industrial segments there are soft due to made-in-China pressures.
Yeah.
The exciting news is the substantial push for data center build-outs in China, which could account for, 40% of global transceiver volumes in 3 years?
That's the projection, yeah. And this really represents a huge greenfield opportunity for MaxLinear. Given the less established incumbency for advanced tech there compared to more mature markets, it's a chance to gain significant footing. This also raises an important question about future tech, right? While cutting-edge stuff like silicon photonics and co-packaged optics, CPO, are indeed on the roadmap, MaxLinear sees them as a more contained offering for specific high-end applications, like NVIDIA or Broadcom switch offerings, rather than a broad network solution, at least for now.
Okay.
Their strategic focus remains firmly on pluggable solutions with sophisticated DSPs, indicating they believe this path offers wider market applicability for the foreseeable future.
Right. And on the supply chain front, management said orders have been steady, strengthening for several quarters, and they aren't seeing any tariff-related pull-ins. However, a significant point here is stretched lead times. Now 6 months or more for OSATs, outsourced semiconductor assembly and test, and SM houses, substrate manufacturers, which are crucial steps in getting chips ready for market. This means any recent order acceleration won't actually impact their revenues for the next couple of quarters.
Yeah, that's a key operational point. If we connect this to the bigger picture, it's just very careful management of demand versus capacity in a complex global supply chain. And MaxLinear's decision to customize standard products rather than pursuing a full custom ASIC business, while still being a strategic partner to hyperscalers, that's a key differentiator in their competitive approach. It lets them scale without taking on the full risk and complexity of a, bespoke ASIC model.
Okay. Finally, a quick update on the Silicon Motion arbitration. Management stated no change there. Arbitration is expected Q4 2025. Resolution hoped for first half of next year. And any cash transaction potentially 2027 or 2028. It's a long road ahead on that one.
Indeed. Still some ways off.
All right. It's time for our This Is Not Financial Advice segment, where we pitch an outrageous but plausible trade idea based on today's deep dive. Remember, this is purely for entertainment and conceptual exploration. Always do your own research.
Okay, so given MaxLinear's stated position as the third supplier in a market starving for options, for those optical interconnect DSPs, combined with their strong traction with the Panther storage accelerators directly addressing AI infrastructure bottlenecks, and crucially, outside the highest profile NVIDIA-specific ramps. Here's an idea.
All right, let's hear it.
Consider a long position on MaxLinear, maybe with a particular focus on option strategies that benefit from a prolonged ramp in general data center and AI infrastructure spend, but spend that is more diversified than solely the highest profile AI GPU clusters. This plays on the idea that their products are foundational, critical across a broader set of hyperscale buildouts, and that their third supplier status could lead to, outsized market share gains as customers seek diversification and those differentiated low power solutions.
Interesting. So a bet on the broader, more diverse build-out. How would you hedge that?
Well, to hedge this, you might consider a short position or maybe put options on a company that is either overly reliant on only the most cutting-edge, bleeding-edge AI cluster deployments, or perhaps a legacy player that has struggled to transition to the advanced process nodes and power efficiency requirements that MaxLinear is highlighting with products like Rushmore and Panther. So this pairs MaxLinear's diversified, lower power third supplier growth with a bet against those maybe with more concentrated or less competitive positions.
Gotcha. Pairs the diversified growth against the concentrated risk. Okay. That wraps up our deep dive into MaxLinear's Q2 2025 earnings. We've seen a company turning what looks like an important corner.
Yeah.
Strong sequential and year-over-year growth, return to profitability, positive cash flow.
Yeah, they're focused investments in these high-value categories.
Yeah.
Data center, optical interconnects, 5G wireless, storage accelerators for AI, fiber AON gateways. They're beginning to generate exciting opportunities, positioning them for accelerated diversified growth in 2026 and beyond. They're sort of quietly building critical infrastructure from the ground up.
Remember, though, this is just one piece of the puzzle. And while we aim to give you the most concise and valuable information, markets are dynamic. MaxLinear's disciplined approach to market segments, coupled with their technological prowess, offers a compelling case for a more resilient growth story. But it's up to you to weigh the opportunities against your own risk. Keep researching, keep asking questions, and always consider your own financial situation and risk tolerance before making any investment decisions.
Absolutely. We encourage you to dive deeper into the details and form your own conclusions.
Thank you for joining us on the Deep Dive. We look forward to our next Deep Dive with you.